Mr. Ramesh Damani is member Bombay Stock Exchange, a veteran. He's joining us right now on the show. Mr. Damani, it's a pleasure to have you back. It's been a while. Prashant this side. So, first up, what's going on? It's almost a buying frenzy. It's like, they're going to shut the market down for the next couple of months or so. So buy as much as you can. That's the kind of action we've seen recently, the last few days.
Hi, Prashant. Thank you so much again for having me on your show. Prashant, that's just, the way of the markets. I mean, if you remember in January and February, there was so much despondency around. And, it always felt like that was temporary, that, the market kind of shakes out the weakest bulls. And this is what it did. I think now the market's latching onto another set of economic events, 2 years of Modi's data, possibility of GST passing, looking ahead to the Fed and Brexit exits. But what has been the case in this last rally is that it's been a very concentrated rally. It has been going up based on FI buying, and FI is about ITC, Larsen, some of the large cap names. So if you're in the smaller mid cap space, you basically have not participated in the last 1,000 or so Sensex points. But it's fine. I mean, that's the nature of the markets. It really advertises what it wants to do. But, it's clearly that the undertone is good, the mood is bullish, and I think it will remain so. Notwithstanding a few challenging events that are shaping up for India and the global economy over the next 8 weeks.
What is the basic foundation you think, or maybe not one, it's always a few of them, that the market is latching on to? You said that it's latching on to new, economic data, beliefs, what's going to happen, and that's positive. But what are those things?
Well, two things that I would suggest are helping this market along. First is the most important question today facing global markets, believe it or not, is not Brexit or whether the Fed will rate increase, but the most tantalizing question is whether India can replace China as the driver of global markets or global commodity or global consumption. There is some evidence that that is happening. I'll give you two data points to look at, which may perhaps answer your question. In terms of oil, India has now become the swing buyer of oil, which causes oil prices to move up or down. We are very thirsty for oil. We are buying oil, and actually our buying has stabilized a very important commodity, which has helped the Dow and all other markets. The fact that oil went up from its lows 30 to 45, 50 now, that has helped calm the equity, global commodity markets, and in turn the global equity markets. Secondly, I think one more important thing that's happening in India that I think people are beginning to take notice of is that, if you look back, 2 years is a good time, milestone to look back at what has been accomplished by the new NDA government. And I think one of the most important things, Prashant, that I find, and a lot of my fellow investors are feeling the same way, is that after almost 50 plus years of independence, we are winning the battle against corruption in India. I mean, for the first time, we actually see corruption level going down. In India, corruption was institutionalized by the 70s, and then it's permeated almost every level of our society. I think for the first time we are seeing, thanks to digitization, transparency, auction, use of various instruments like Jan Dhan, Aadhaar, PAN, better streamlined auction procedures, we are seeing for the first time that we are winning the battle against corruption. And that's a very important yardstick for investors because, we'd almost given up that this battle could never be won in India. And of course, if we start making a dent in it, I'm saying winning is maybe even a decade away, but if we make a dent in it, it would largely enthuse the market. So I think for good measure, we are, of course, becoming important, with the Indian economy set to be the fastest growing economy. So that stabilizes a lot of markets, A. And B, that our ease of doing business, corruption is starting to finally improve. We're finally starting to take baby steps towards that. I think that helps the market along. Thirdly, of course, we are in a bull market, and that's what I always keep repeating. That's what happens in a bull market. When people give up, the market suddenly rallies and in 10 days makes up all the losses. And that's precisely what has been happening, Prashant.
Mr. Damani, let's look at the slightly longer term, not very long term, but slightly longer term. I was looking over the weekend at some numbers from the Labour Department. Labour Department releases quarterly jobs data. Now, nothing close to what the US does. They survey about 3,000 households. The NSSO surveys once done every 5 years that covers a lakh odd households, but it gives very crucial insights. The Labour Department data for 2015 actually showed that job growth, the number of new jobs created in the economy, were the slowest in a long time. I mean, they started collecting data right after the financial crisis. Some 1.5 odd lakh jobs were created in 2015. The big number, which is very widely discussed and well known now, is that we need about 10 lakh new jobs every month, right? That's a crore plus jobs every month, every year.
That's the truth. Yeah.
Yeah.
Every year.
What is the implication of this? I mean, if growth is happening, but all these people are coming into the workforce, there aren't enough jobs. It is going to have I mean, there are social issues aside. It's also going to have an impact on purchasing power of people, right? Because consumption is the big driver in India still.
Well, I haven't seen that report, so I won't comment on that specifically, Prashant. But here's my broad thought on it. See, the government has, in the last 2-3 years, unleashed 2 or 3 quivers from its arrows. One of the quivers is, say, the Make in India theme that the government has been pushing, so hard and fast. Big launch in Maharashtra, and then they're taking it from there. And if you recall, recently, Tim Cook from Apple was visiting India, and there were some talks of Apple investing in India. Whether that happens or not, I don't know. But if you look at the value proposition, India is a country which, as you know, and I actually believe that the ISRO department has done some absolutely brilliant work in space exploration. They launched something to Chandrayaan. They launched a reusable space shuttle. For some reason, they don't have a public relations agency that publicizes what they do. I mean, such an extraordinary achievement to join a club of 3, basically, America and Russia, to launch a space, a prototype of a space launch. And yet I think most Indians don't even know about it. Now, a company can deliver that kind of technology like the Chandrayaan, can surely go to Cupertino and tell Tim Cook that, hey, give us a chance to build the iPhone out here. So we need to get back to jobs in manufacturing. I'm not underlying or dismissing the importance of that. I don't think services alone would get us out of this quagmire. But I think there's a right thought in the process. Now, I think this would be a test case. If we can agree and get Apple out here, it would be a beacon for a lot of other foreign direct investment to come into India, which will all be in the manufacturing jobs, which will help us tremendously. Let's see what that happens. I think the early signs are that they are talking to each other, and there's some dispute regarding what is the amount of local content or what have you. But my sense is that Apple is also very keen to get into India. India is very keen to get Apple here. So sooner rather than later, the government will come to some sort of agreement with them. That could be just the beginning of a domino effect of foreign direct investment coming into manufacturing and contract assembling in India. So, I mean, you're right. It's a tremendous challenge. I'm not saying it's not a challenge, but that is what typically bull markets do. They climb these kind of walls of worries. And, if it was so obvious that we could create employment for everyone and India's GDP growing 11%, the index would be, significantly higher than it is now. So I think a lot of that uncertainty is at these levels baked into the price.
Fair enough. But in a way, do you feel that is, we don't get to hear too much commentary around that? I mean, the jobs situation or the job, some have called it jobless growth, right? I mean, growth seems strong, and it is not necessarily the fault of the government per se. It's new technology. It's more capital intensive, automation, mechanization, right? I mean, it's a trend world over. But the point is, we have been touting the demographic dividend for a while now, and that's on the basis of what the entire consumption story is based on, right? I mean, the workforce is about 50 odd crore people. Under 20% is salaried out of that 50 odd crore workforce. And the thought process is that more and more people will rise up and consume more. Premiumization in all segments of the economy. So do we need to kind of sort of talk about this a little bit more? Is it a kind of underappreciated risk, or you think, people are very well aware of this?
No, I mean, we've talked about it. It's not that, I don't see regular strata of society talking about this. Of course, it's equally important. And without jobs growth, there is no demographic dividend, as you rightly point out. Of course, it's, equally important. But, if you were interviewing me in the 85, 89, 90 period, you would have said, what's going to happen to this country? We're not creating jobs. So much happened. And then the technology industry took place. The Indian software industry, boom, took over the world and, created so much employment. You don't know. I mean, I think we have very little knowledge. As Buffett said, the only reason economists exist to make astrologers look good. So who knows, where the employment is coming for. I think for the first time, I get the sense, and I could be wrong, that we are moving in the right direction. We are laying the foundation of more stable, more prosperous growth ahead. We will see how the story unfolds. It's not going to unfold in a big bang way as has been often wanted by the Wall Street or by the economists, but in a more gradual way. If we tackle the problems of, say, Swachh Bharat, we tackle the problems of corruption, we tackle the problems of Make in India, I think that lays the groundwork for a much better runway for the economy and in effect for the markets. Another idea, Prashant, that has been getting a lot of attention to the point that you have mentioned is increasingly in the globe, a lot of that employment that used to be there, say in the print media or say in manufacturing, has permanently gone away. So increasingly governments are looking at what is called UBI or Universal Basic Income. And it's a mixture of Aadhaar and giving Jandham money to people. What they're saying is that basically there is a permanent structural shift in employment, and it is the job of the government to guarantee a basic income to all its citizens. Now, obviously, they can do it in the West because the treasuries are far richer. But I think there are challenges that faced not India, but all societies in general. As automation take away jobs, I mean, God forbid, they're taking away jobs of traders, So who knows where this automation theme will lead. So there are, very important challenges, whether it be the driverless car will do away with drivers. Can you imagine that happening to the so many army of people employed as drivers, cleaners, mechanics in India or elsewhere in the globe? It's hard to, find that play out. And the way I look at it is that you want to find people or companies or markets that will benefit from this trend. I mean, that's my job and that's what I intend to do.
Okay, let's get back to the market per se. You said the rally has been very concentrated, Mr. Damani. So where are you really focused on concentrating, in a way, focused way looking for opportunities? And how do you see this playing out from here? And begin by answering that question by telling me if you think this move is sustainable and we're going to build on this now.
I can't answer this question. I mean, I think it's a bull market. I've said that for a number of quarters now whenever you've asked me this question. Even when it's been down, when it's up, these things happen. Markets get volatile. I think the market will probably be higher a year from now and significantly higher 2 years from now. In between that, you'll have to be accompanied by a lot of volatility, like the kind we saw in January, February. Unfortunately, there is no way around that. I mean, that's just the way markets are. That is the nature of the beast. To come back to your first part of the question as to which parts of the market do I like right now, of course, we are almost 90-95% invested in the markets, so there's not that much money to move around. But if you saw the numbers of the oil marketing companies, I think they're trading at low single-digit PEs and almost 3 or 4% yields. So they make an attractive basket because India, as I mentioned to you earlier in the interview, has now become the swing buyer of oil. So that means a lot more throughput is going through the companies. Because of deregulation, they have some pricing power. They're trading at very low PEs because market don't think these earnings are sustainable. The dividend yield is very handsome in these stocks. So I think these stocks over time will be re-rated by the market, will include not only an earnings expansion, but a PE expansion. So that would be a good place to be in. I think if you want some sort of, better known names with some sort of earnings visibility, I would suggest you start looking at those stocks. The other part that I'm personally excited about, Prashant, is that a lot of us cut our teeth in the 90s when Infosys went public. That was the benchmark IPO that brought a lot of young people into the market. People who didn't necessarily understand cement or steel or machinery moved into technology and Infosys because we kind of understood technology. But ever since Infosys has gone public, we've been looking for stocks that we're not following the services-oriented model only. While it's been very profitable, it has its own shelf life. Services-oriented model being one that exports to the West, earns in dollars, gets margin, that kind of business. We want to look for companies that were addressing a domestic need, could have rupees revenue in rupees or dollars or euros, and had some innovation regarding the local market. I think for the first time since the 90s, we are finding a basket of companies, whether it's in knowledge, whether it's in customer identification, or whether it's in antivirus protection, that are now creeping up into the market, and they're by young promoters, are very ambitious, who are focusing on different niche segments and not following the traditional service-oriented, dollar-denominated revenue that was followed by their predecessors. That was a good model and that worked well, but that is largely now priced into the market. So when you look ahead into this, I find quite a few new exciting companies in that area. So it's too early to say, which one would be the standout winner. But there are 3 or 5 or 6 of these companies, and we should start taking a serious look at them. And they service all sorts of areas, whether it's in, driverless traffic technology, whether it's in antivirus software, whether it's in identification. So, there's a fairly good choice that you have there.
Okay. These are relatively newer entities you might have invested in, Mr. Damani, or you
fairly. Some have IPO'd recently, some have been around. I'm sorry. Some may have IPO'd recently, some may have been around for a while but are rechanging their business models. You kind of have to go through them and look at them with new set of eyes. There are a lot of companies that have in the product space that delivered a lot of value to shareholders globally. Say Intuit which did the quick and easy accounting software in America, Tenemos with the restaurant booking and hospitality industry, Tencent in China, which have focused on the domestic market with the global platform and being big in the domestic market before moving overseas. It's for 20 years in India, because it was such an important software-led model. We only focused on that part of the market. We ignored the entire other parts of the market, the domestic part, the need for so many. So as a result, Facebook, Google became big in India, but Indian companies didn't become big in India. So I think for the first time, the Indian entrepreneurs are clawing back, if you will. I'm not saying that they're out of the woods. They're clawing back, and they're trying to find niches that are important for them. And I think some of them found them, and I think some of them will do well over the next few years. So if you're looking for slightly riskier investments, but with the payoffs being much better, I think those are the subsets. I can't unfortunately name names, but I think that is the subset I would look at.
Okay. One company which kind of fits the criterion, and you said recent listing as well, is Quick Heal, which we have up on our air right now. Again, obviously Mr. Damani can't name names, but fits broadly the criterion. Mr. Damani, anything, the consumer stories, which in the fourth quarter we had the numbers coming out, reported pretty strong numbers across the spectrum: discretionary, staples, durables. If you look at volume growth numbers, 10 to 15% volume growth across these segments. Is there value anywhere there in that spectrum, or you think it's very finely priced sectors, the consumer space?
I'll tell you one thing: they're never going to be cheap. You can hold your nose and buy them. You're not going to buy them in terms of cheapness. You want to buy cheap, look at OMCs. They're cheap. You're not going to find these businesses for a good reason, because they're basically very stable cash cows, very strong franchises that are available to investors, and they've compounded at greater than 20% for I don't know for how many years. So it's one of those things. You can either buy high quality at high prices, or you can buy stocks when they're cheap and hope they get to that high quality drive. I still have a large percentage of my investment in the FMCG companies. Am I buying anything new now? I haven't really seen anything that really is, got my, druthers up. But, I would think some of these sectors, like the OMC, the airline sectors, have a chance of being re-rated like these companies. Stable cash flows. They'll move away from being cyclical to stable. They'll move away from being, sporadic in dividends to consistent dividend payouts. And as a result, the market will re-rate them from single-digit PEs to perhaps double digits. So if you want to take a chance on that kind of company, maybe those are the two areas to look at.
Right. Airlines as well, right? You said airlines can also get
Yes,
re-rated.
they have some of the same characteristics. Yeah, the same characters I like. Of course, notwithstanding what's going on recently with Egypt Air, we still don't know the reason that happened. So I would be a bit worried about the airline sector, particularly if there was, God forbid, some more mysterious crashings in the next few weeks or so. But ultimately, the globe will figure out a way to deal with, the problems that happened or plagued Egypt Air.
We've had a couple of these healthcare companies coming to the market recently. Again, a very large market, diagnostics basically, right? Stocks very well received by the market, 50% higher on day one, etc. But very small percent, about 10% of the market, their diagnostics market is organized. Any thoughts? Have you looked at any of those? Mr. Damani, if you can hear me, I was just asking you about the diagnostics companies, healthcare diagnostics companies. We've had a few of them in the market. They've done very well in the market as soon as they've been listed. But it's still a large opportunity because the organized segment is extremely small, under 10%.
Right. We all have a circle of competencies, and I have not really paid a lot of attention to this particular sector. They've been well received by the market, along with the microfinance companies and the small bank payment companies that have come in the public. But it's not been a sector that I've been very strong on. So at this time, I really don't have much to add to the discussion.
Okay. And NBFCs as well, you've kind of stayed away. Again, extremely strong growth rates.
I have NBFCs in my portfolio from an earlier time. But the new ones that have come and have been well received by investors, a lot of them in the microfinance space, and I just my personal feeling, I'd be completely wrong about this, Prashant, is that I have some trouble with these companies. First of all, they borrow money from banks and lend it at higher rates, which is not necessarily the best idea. You don't have your own low-cost deposit base, from what I understand. And secondly, they loan it out to people, assuming that everyone in every village is a successful entrepreneur, that he can take 1 lakh rupees and make a return on capital, which would be substantially higher, and then repay it back with very low default rates. I have a problem believing that everyone in a village or everyone in a community can be an entrepreneur and can return the money back. So, I'm not sure. I could be wrong. I'll have to study these models more. But, maybe these models don't necessarily belong in the for-profit sector, but more like a Grameen Bank belong in the non-profit sector. I'm not so sure. So, as a result of that, I have not participated in that. But I must admit that I'm not fully conversant with these companies.
Okay. Got that. Fair enough. Mr. Damani, thank you very much for joining us. It's a pleasure. Appreciate you coming on with that perspective. Thank you indeed.
Thank you, Prashant.